Now, I'm sure that you've already seen the news that Chinese stocks have came down tremendously in the last few weeks. If you look for Alibaba, from where it was at the peak to where it is right now, it's lost about 40%. If you look for the last 6 months for the rest, Tencent, Baidu, JD, PDD, they've all came down respectively. Now, the million-dollar question is it an opportunity to buy? Now, on this channel, I've covered before Alibaba, I've covered before JD, I've covered before PDD, Baidu included. I kind of understand, the delisting risks. I also understand the VIE issues that CCP is trying to regulate right now. These are all boring stuff. I guess you already know them in one way or another. Today, I'll be sharing with you my own thought processes, my strategy, as well as where I exactly stand in this whole investment opportunity. Now, let's try to understand things by thinking back on what happened in March 2020. Follow me with this. You realize that back then, it was the COVID crash, correct? First time in humankind we've seen such a big widespread pandemic. But the biggest news for stock markets wasn't, banks are not doing well, wasn't e-commerce is so good, wasn't technology solving all problems. It was this that really intrigued a lot of people, which is cruises coming down, airlines crashing down, needing bailouts and stuff. That's why I've done a lot of videos on SIA during that period, because it's a high search volume. Now, the problem with EdTech is similar to that situation, whereby profits are being permanently challenged. But we'll not delve into too much on that topic, because I'll be sharing with you the key learning points, which is this. At the start of the crash, there's actually a lot of people attracted to it. Very contrary, right? When thing comes down, why are people gravitating towards it? Quite simple, because many retail investors have this trader mindset, and they actually know that when things come down abruptly, there is usually a big abrupt bounce also at some point of time. They are looking for the high risk, high return idea. It's very seductive. That's why the news is running on it. The anticipation of what's going to happen is very strong. That's why everybody gravitates to that crash situation. It's not that everybody's avoiding, so do take note of things. It also does not help that the news is flashing headlines. China equity has crashed, or even that Cathie Wood now is calling a revaluation reset, which means, in simple terms, a correction in Chinese equities. There are so many people that follow her, and so many people that are, calling that, the ultimate contrarian indicator that this is the worst situation for Chinese equities. It cannot get any worse than that. And that's why you see volume. Let me flash up for you to see SIA chart. You realize that volume now is 5 or 10 times more than what it used to be. Previously, SIA was boring. Nobody's trading SIA. But now, look what it is. And then you look in terms of Chinese equities. This is a chart to show you this is in QUEP. The inflows to QUEP, which means a lot of people are buying into QUEP in this current crash itself. Buying, selling, buying, selling. The bulls and bears are really fighting it out. The bulls are just thinking this is the maximum opportunity. Let's go in. There's a quick rebound, which will definitely happen at some point. The bears, on the other hand, are just short selling it all the way down. So this massive tug of war, that's why you see volume. What about for Carnival Corp? You also see the same thing. You realize that volume has actually spiked, correct? At the peak of the crash. But the problem is this. As you buy on the way down, you do realize that you get the timing somewhere wrong, you are going to get hurt. That's why I have two key messages for you today. The first, do not assume that the market is stupid. Many people are seeing this crash and think there is a once in a lifetime opportunity to go big on it because the market is not seeing what they're seeing. Not correct. Usually, the market is seeing something that we may or may not already know that's going to happen 6 or 12 months down the road. The market can overestimate the severity, but at the point of time, the market is more likely than not correct. The second part I'd like to share with you is, even if you continuously buy on the way down, now Alibaba is at $200, you buy at 175, 150, at some point you're going to catch the bottom, correct? Alibaba is still sound, no issues. But in any case, if you want to buy this whole crash, my suggestion is go broad-based. Buy funds, buy ETFs. Because when you buy broad-based, it cannot become zero. A particular company like Alibaba can go to zero, very unlikely, but that cannot be said about the EdTech sector. So my suggestion is, if the thing keeps coming down, at some point, you are naturally going to get the bottom price. It is true. But I'd like you to see this also. What has happened to SIA shares? It's traded sideways, correct? What has happened to Carnival shares? It has also traded sideways, correct? The point I'm trying to make is, what do you realize? After a crash, the sentiment still remains pretty negative for the foreseeable few months ahead at least, which means there is, beyond that, no outperformance. The rest of the market is doing well. This sector is still healing. It takes time to heal. Do not assume that you bought the bottom, good for you, because it can still go sideways. It can underperform. And what you don't want to hold is Chinese equities, expecting a quick bounce, and then you see US equities, Singapore equities, European equities, everything going way faster than what you own, and you'll be feeling absolutely terrible about it. If you agree, smash your like button. It tells me that this message was useful or you agree with the point of view. If you disagree, smash or dislike. I would like to hear your point of view on things. And with that, I'd like to share with you a further logic, which is this. Markets bottom out when there's maximum pessimism. And maximum pessimism is not at the point of crash. If you're attracted to it, thinking it's maximum pessimism, let me share with you this. Maximum pessimism is when that thing, that investment idea, that sector has done nothing. Everybody has given up on it. Right now, people are still bullish, very in the near term, about a quick recovery. Maximum pessimism is when it's done badly for a prolonged period of time. Everybody has thrown in the towel. That is actually when a solid base is built. Maximum pessimism. So if you understand the logic, you do know that if you buy into something that crashed, you must be able to withstand a period of underperformance. You know, right now, Monish, Charlie Munger are buying to Alibaba, but they are very long-term investors. They are thinking 10 years. The question I have for you is, are you ready to wait out 10 years? And in the short term, in the near-term period, you may see underperformance. The hallmark of a good investor is the ability to withstand near-term underperformance for long-term sake. Think about it. That is a very important message, because if you're hoping for a quick bounce, you might do things wrongly. And that's why I'll be sharing with you my strategy today. I believe Chinese equities will recover. Nothing is broken, especially in the big tech. Ad tech, I don't know. Big tech, Alibaba, Tencent, Baidu, Meituan, nothing is damaged. Yes, profits may decrease a bit because of regulatory pressures and changes to how they work on businesses. But nothing is changed. Day in, day out, things are still going to be the same. My approach is to buy broad-based funds. We don't know which companies will be the most affected. It could be JD, it could be Ali. No point taking a bet, buy the broad-based sector, especially when everybody is seeing negative sentiment. And not only that, when you buy broad-based, buy slowly. If you have $100,000, my suggestion is don't put 50,000, thinking that now has crashed. Great opportunity. It will rebound. My suggestion is to buy very slowly. If you have 100,000, buy 2,000 a month. Pick it up over the next 2 years. So what if it recovers ahead of time? Good. You have something that is going up already. Not too bad. In any case, if you buy 2,000 per month for the next 2 years, for example, at some point the sentiment would recover, would heal. And then you're buying this sector whereby it has price earnings expansion. Sentiment is better. Market is looking to reward it. There's no negative news lingering over it. You realize that price starts to go up and you have a system in place to continuously buy. That is something that I teach in my private investor channel. So if you're keen, look for it below. And with that, let me introduce to you things that's coming up on this channel in the subsequent weeks. I've had a quick chat with a friend, Chi King. He's a big bull on Alibaba. Let's hear his point of view. He has done a lot of research in Alibaba. If you're keen, I'll actually share our discussion with you on this channel upcoming. And not only that, in the next few weeks, I'll be sharing with you top ideas for August, which will revolve around how to buy Chinese funds broad-based to take advantage of this situation, especially if you're a long-term investor and willing to really go with a slow and steady approach with this long-term game. So if you're keen, smash on subscribe, and I'll see you in the future video. So take care and goodbye.